And the recording is on. Welcome everyone. Just with today's backtesting session. It's Sunday again, so I just jump right into it. So, question, guys: what do you have to do every single time before we start the backtesting session? The answer is on my screen. What do we have to do?
Check out news.
Check out the news, exactly. We have to see the news. Even if you're backtesting, you have to check the news. So let's just start it. Oh, sorry, we didn't choose the day. Let me just generate a number from, for example, from the 27th of February to the 27th of March. Random number generator. Okay. From 0 to 27. Okay. 11th of March. Is that a trading day? Let's see. 11th of, yeah, that's a Friday. So we will backtest the Friday. Sorry, why did I close this? So let's see the 11th of March on Forex Factory. And as you can see, on this day, only one high impact news will be released, or has been released actually at 4 p.m. But it doesn't really affect our trading session because it's in the afternoon. So we don't really care about this high impact news. So let's just start the session. Just one more feedback. If you can hear me well, see my screen well, everything is going fine, perfectly. Last feedback, perfect, okay.
Yes, everything.
So let's just start the analysis on the 4-hour chart, but actually let's just replay price first to the 11th of March, which is right here. Okay, 11th of March, 1 hour before New York session starts, and let's switch to the 4-hour chart. So what can we actually see on the 4-hour chart? We can see that price is in a bear trend, right? Price is reacting on this daily demand zone, on this daily demand level. We've talked about this daily demand level several times in the previous backtesting sessions, webinars, recap videos, markups, case studies, etc., etc. In every single content, we talk about this demand level. But let me just show you this demand level once again. It was the extreme of the movement on the daily chart, as you can see. Here's that daily demand level that has caused the inefficient movement to the upside, and this was the origin of the whole bullish order flow to the upside, which was leading to a break of structure to the upside here, as you can see. So this is our extreme of the movement. This is the origin of the whole bullish movement. Switching back to the 4-hour chart, you will see that price is reacting on this daily demand level, as you can see. That this zone and immediately reversed to the upside, created a 4-hour V-shape recovery, as you can see, and created a change of character on the 4-hour chart as well. Here, this is the 4-hour change of character line. This is a 4-hour change of character. I will just type it here for the clarity. Okay, change of character to the upside, perfect. What else we can see? We can see that price is created. Daylight saving from daylight saving New York began. Yeah. The session is from 2 p.m. to 5 p.m. at this region. So we can see that price is created inefficient push to the upside from this region, from this 4-hour demand region, as you can see, and the origin of this 4-hour inefficient push was this demand level right here, because as you can see, the inefficiency has started from this candle and not from this candle. Between this candle and this candle, there's no inefficiency. Between this candle and this candle, there's inefficiency between the wicks, as you can see. So this is our inefficient structure breaking. Here's the break of structure, liquidity sweeping level. Okay, what else we can see? We can see that price is reacting on some sort of supply zone in this region, and that supply zone was actually this supply level right here. I will just extend the zone. There was a reaction on this supply level, as you can see. Actually, this is a valid supply level because it created a sweep of this liquidity, a small inefficient movement, maybe in the 15-minute chart and the 4-hour chart too, and break of structure here. So basically, this is a valid supply level inside of a liquidity pool. So this is a liquidity pool also, sorry. Okay, I'm back. So this is a liquidity pool, and as you can see, price is reacted on this supply level. And after the reaction, it just swept more liquidity to the upside at this region because it created double taps, equal taps right here, first tap, second tap, and this movement swept the liquidity to the upside. Okay, that's our current outlook on the 4-hour chart. what else can we see? We can see that price did not change character on the 4-hour chart on the way down. So this is one inefficient movement to the upside, and this counter trend movement didn't change character here to the downside, but I believe it changed character on the 15-minute chart. So there was a 15-minute change of character somewhere around here. Okay, I believe that's all we can tell about the 4-hour chart. And actually, we can spot this 4-hour supply zone up here, but we've talked about this supply level several times in the previous sessions, frequent videos, etc., etc. And this supply level has liquidity, as you can see. Here's a perfect liquidity build-up for the supply level. This supply level actually broke the daily demand level and the daily structural level. This is a daily structural low, swing low, and this movement has broke below this daily structural low. As you can see, this wasn't a break of structure. This wasn't a break of structure because this movement, this gap right here, was caused by the Ukrainian-Russian war. And this gap was caused by that war. So basically, this doesn't count as a break of structure. The real break of structure, real swing break of structure was caused by this supply level up here with huge inefficient movement to the downside, as you can see. And it also has liquidity right here. So this is a pretty valid supply, and we are waiting for this supply to be tapped currently today. Okay. So that's enough of the 4-hour chart. Let's just switch to the 15-minute chart. And let's see what we can see on the 15-minute chart. So here was the 4-hour supply reaction. As you can see, here was a reaction. This was a liquidity sweeping movement on a 4-hour chart. This was a liquidity being swept. This is a liquidity sweep. And after this, as I said, the 15-minute chart has changed character here to the downside because this was the last 15-minute demand level that has pushed price new heights, swept the liquidity, and price immediately changed character here on the 15-minute chart after the liquidity sweeping movement on the 4-hour chart, and also changed character here to the downside because this was the last swing low point on the 15-minute. So yeah, basically, our main trend has changed into bearish on the 15-minute chart. So our main trend is bearish on the 15-minute chart. And let's talk about the expectations, what we can expect from this current price action. We can actually expect the top of this 4-hour demand level right here. Let me just switch back to the 4-hour chart, which has caused the inefficient movement to the upside here, as you can see. So we can actually expect the top of this 4-hour demand level because it's pretty close, as you can see. Maybe in this session or the Monday session, we can expect the tap of this demand level, this daily demand level. Okay, what else can we see on the 15-minute chart? Let me just check the chat because so some message. Many gap Indian index, how consider gap mean? Okay. So what can we see on the 15-minute chart on this current leg? I'll just remove the zoom. So we can see that price has started a bearish movement, bearish order flow here to the downside with huge inefficient push. And we can see that price has built up liquidity at this region. So basically, this is a perfect liquidity line with efficient movements. So all of these movements are efficient, as you can see. And this was a liquidity building up movement right here, which has been swept by this movement to the upside. And 50-minute/5-minute demand level, supply level has been tapped right here, as you can see. So here was a supply reaction. And after the supply reaction, prices changed character to the downside and broke below the last recent demand level, 50-minute demand level right here. Okay, we can't actually know if it was just a liquidity sweep to the downside or break of this demand level, because as you can see, the 15-minute candle did not close below this demand level. So this candle just wicked below this demand level. So we could actually consider this a liquidity sweeping movement, but there was no real liquidity at this region. So I believe this was a break of this demand zone, considering the 15-minute trend and considering that we are heading down to this 4-hour demand zone. And considering that prices recently swept the liquidity to the upside and tapped into this supply level, we can consider this as a break of this demand zone, but we have to see. Okay, switch to the 15-minute chart. Actually, let's just mark out supply level at this region. This was the origin of the break, the 15-minute origin of the break, and switch to the 5-minute chart. And actually, let's see. Sorry, let's just mark out more demand levels. You can see that here's another unmitigated demand level, which has almost been tapped at this region, as you can see, but this wasn't the tap. But as you can see, this demand level is part of the liquidity. Here's double bottoms, equal bottoms at this region. First bottom, second bottom. So this demand zone will be liquidated, and this is liquidity built up for the 4-hour zone down here. So this is one more confluence for the break of this demand zone. This is one more confluence for the continuation of the short trends, and this is one more confluence for the expectational tap of this 4-hour demand zone down here. Okay, can we see something else here? I believe no. That's all from the 15-minute chart. I will just mark the liquidity right here. And basically that's all from the 15-minute chart. I will mark the liquidity sweep 2. Liquidity XXX being swept. Perfect. So that's the current outlook on the 15-minute chart. Let's just switch to the 5-minute chart and let's see what we have here. Let's just refine this zone. And as you can see, we can perfectly refine this zone to this level on the 5-minute chart, because all of these movements above this 5-minute supply level are efficient. So these candles are efficient. There's no inefficiency on these candles. There's no real inefficiency. The real inefficiency has started from this 5-minute supply level here, as you can see. Okay. Let me just see if we can refine this 15-minute demand zone too. We can refine it, but it actually doesn't really matter because this will be broken sooner or later, I believe. That's our refinement. Okay, what else can we see on the 5-minute chart? We can see that we have liquidity right here too. So this is one more confluence for the upcoming shorts. I will just mark it as here like a liquidity line. And basically that's all for the higher time frame. That's all for the 15-minute chart. That's all for the 4-hour chart. That's all for the 5-minute chart. Let's build a plan. Let's build a narrative. As I always say, as I always tell you, that you have to build a narrative before you start trading. You always have to build a narrative before every single trading session, before every single backtesting session. Because without a plan for that specific session, without a narrative for that specific session, you'll be lost. You'll be blindly trading without a plan. So that's why you have to build a plan for that specific session. And that's what we are doing right now. So I would just ask you that what can we do in this scenario? What will be your plan? Please feel free to use your microphone now. What will be the plan in this specific scenario?
Waiting for demand to supply tap and waiting for 1 minute charge.
Yeah. Which will be the best possibility? The supply tap or the demand tap? Considering the trend, considering every single confluence.
Waiting for the sub.
Sorry?
Go, Marcel. Oh, sorry. Go.
Waiting for the
Whoever
sub-
said that first, go.
Just one, only one at a time, please.
Yeah.
Now we've started. Someone started.
All right. So look, right here. I'm trying to see if I want to see if this is let me look on my chart. So why are you not considering this demand supply here as your flip zone, since price, you know, didn't break below that initial demand level? Would that also be considered one potential place to see
Actually, yeah. That could be considered a supply level, and that could be considered as a actual flip, because as you can see, this was the less recent demand level, but this isn't a real demand level because this couldn't push price new highs. So there's no breakout structure on the 5-minute chart. There's no, literally this demand zone did nothing, right? Nothing than inefficiency. There's only inefficiency that has been started from this demand level. And yeah, actually price is reacting on this demand level at this candle. So basically this is a buy to sell candle, but we don't really care about buy to sell candles because those buy to sell candles could be worthless, but there's a chance that price will react on this buy to sell candle.
Okay, yeah.
Let's just test it out. So basically we have two supply levels. I'm expecting the top of this higher supply level, and actually the top of this higher supply level could happen because this supply here, the flip nothing, because this wasn't the demand zone. So the flip didn't really happen. But as I said, there could be a possibility that price will react on this supply level instead of this one. We just have to monitor price. So I'm building a plan. Our plan for this, sorry, there's a message in the chat, for our demand tap and then wait for a break of the 50-minute. Yeah, that could be a good plan. But this forward demand level is too far away. We can actually trade the order flow down to this demand level. So our main 50-minute, 5-minute, 1-minute order flow at this region is bearish. Our 4-hour order flow is bullish. So we are trading the lower time frame main trend down to this demand level. And after the demand tap, we can, before the demand tap, we can ride the expectation on short order flow down to this demand level. And after demand tap, this 4-hour demand tap, we can wait for a 50-minute change of character. And after a 50-minute change of character, we can ride the long expectation order flow to the upside. And why are we waiting for a 50-minute change of character inside of this 4-hour zone?
Because that's the only way that it's sustainable versus a 1-minute chart.
Yeah, exactly. Inside of 4-hour zone, we always have to wait for a 50-minute change of character. Without a 50-minute change of character, that 4-hour zone top will be invaluable. Okay, so Our plan here basically is that we are waiting for a tap of either of this zone or either of this zone and waiting for a change of character, waiting for a 1 minute change of character on these zones. If the 1 minute change of character happens on these supply levels, we'll be able to ride the expectation short order flow to the downside. But if, let's say, the break of these zones happen and price creates a breakout structure to the upside, we have to build another narrative. We have to build another plan. But that's too far away. Let's just react on these zones. As I always say, you just have to react and you don't have to predict shit, right? So let's just switch to the 1 minute chart and let's see what we got here. The upper one is the buy to sell candle. The downer one is the original supply. So let me just close these zones a little bit because it looks better. So session starts in 1 minute. Let's see what happens. And as I said, we don't know yet if this was just a liquidity sweeping movement to the downside or a break of this 15-minute demand level. We'll be able to know if price reacts on this zone or this zone. If price creates a change of character on these zones, we'll be know that this was a break of this demand zone and not just a liquidity sweeping movement. If price aggressively breaks through these supply levels here, we'll be know that this was just a liquidity sweeping movement to the downside. So all we have to do is react right now. Did we check in the news? Yeah. Yes, we did. So let's see what happens. Okay, it's going up, building liquidity. Okay, the first decisional buy to sell candle has been tapped. As you can see, prices built up loads of liquidity at this region, loads of liquidity at this region. So basically, this is just the whole liquidity line built up for the upcoming short. So this is the first sign that this wasn't a liquidity sweep, because after a liquidity sweeping movement, price usually aggressively reverses. So after a liquidity sweeping movement, price usually reverses with a high volume movement to the upside, because all of the orders have been converted into buys. All of the short orders, all of the previous long orders at this region, and all of the previous stop losses have been triggered as region. And all of these stop losses have been converted into new buy orders. So price usually reacts aggressively and with high volume after liquidity sweeping movements. As you can see, at this region, we can't really find high volume movements. So this is not high volume. So we can know that this wasn't a liquidity sweep. Let's just wait for a change of character. Okay, price is reacting, still reacting. Okay, and aggressive movement. Who did say this was a valid supply zone?
Nick,
Me.
I guess, yeah.
Nicholas?
Yes, sir.
Yeah, you were right. This buy to sell candle was the right supply zone right here. Because as you can see, prices changed character here to the downside and reacted aggressively on this supply level. Here's a change of character to the downside. Basically, here's a change of character because this was the last demand level right here that has pushed price to new highs and was causing the tap of the actual supply level. So basically, a change of character has happened here to the downside, as you can see. And the origin of the change of character, let me just play a few more candles. Yeah, the origin of the change of character.
That just proves how important it is to not try to be right and perfect about everything, and just make sure you have multiple highly probable regions, you know?
Yeah, basically all you have to do is react. You can have multiple regions, you can have multiple supply levels, multiple demand levels. You can draw all of your charts with supply and demand levels, but all you have to do is react on those levels on the 1 minute chart. If there's a reaction on that either of one of these zones, you'll be able to enter in the trade. That's all. You don't have to predict which zone will hold. You don't have to predict which zone will be able to hold price. All you have to do is react on those zones.
That's a big note. It took myself, and I'm sure plenty of other people, a long time to realize that, because everybody's too focused on being perfect or right. It's a waste of time.
Yeah, you don't have to be perfect. All you have to do is just react. So yeah, let's just continue. And as you can see, this is a strong change of character to the downside because it changed character on several places. Here's the first change of character. Here's the second change of character. Here's the third change of character. So basically, this is a really, really strong change of character after the higher time frame supply reaction at this region. So in this case, I will be safely setting an order limit on this supply level. Let's just see the first limit order.
It's a flip in there too, huh?
And our initial target point could be this 50-minute demand level, or we could aim for the swing 4-hour demand level, because this 50-minute demand level is part of the liquidity. If this demand zone is being tapped, I believe it will be broken because the higher time frame intentions, I mean, the lower higher time frame intention, which is the 5-minute and 50-minute, is leading down to the 4-hour demand zone. And this liquidity line right here is one more confidence for the shorts, one more confidence for this demand to be tapped. So we could aim for the 50-minute zone and we could aim for the 4-hour zone. Actually, we can take partials at this region, but I'm not taking partials. So I will be aiming for this 4-hour zone. Okay, let's see what happens. Okay, that was almost a tap. And prices broke structure to the downside. So there's a sub break of structure to the downside, as you can see. And this sub break of structure has been caused by this candle right here, actually. I'll be keeping the first order. Okay. This is actually a pretty funny scenario because if price forms a liquidity for this zone, so if there will be a liquidity, we'll be able to take an order limit on this zone too, because there was an inefficient push to the downside, there was an inefficient break of structure to the downside. But if there will be no liquidity for this zone, that means that this zone will be liquidated. And this zone will be liquidity for this upper origin of the change of character zone.
I like that a lot. It's awesome.
Okay. So if there will be liquidity, we'll be able to take a limit order on the decisional zone. Because as I always say, the character changing, the origin of the change of character will be always stronger than the decisional zone, right? But as I told you in the last recent session, in the previous session, I believe, or the session before the previous session, as I told you in that session, if there's a liquidity for a zone, that zone will be played out perfectly. But if there's no liquidity for a zone, that zone will be the liquidity for the extreme one. So this is the perfect scenario for this. This is literally the textbook example for this. If price will create liquidity for this zone, and there will be liquidity, this zone will be able to hold price. But if there's no liquidity for this zone will be the liquidity for the upper zone, and this will be the liquidity for the upper zone. So let's see if there will be liquidity. Okay, there's actually liquidity. We could consider this a liquidity, as you can see. Here's liquidity. So let's just play a few more candles. Okay, I will be safely setting an order limit on this candle right here using the full body entry. And I will be using the full body entry because, as you can see, the full body entry covers the zone perfectly. But if, let's say, price breaks a little above this zone, let's say breaks a little above this zone, that additional 50% entry would not be able to keep us in the trade, because if price breaks a little above this zone, price will go up for the extreme. So it doesn't really matter if you set an order limit on the full body or the 50%, because this small additional stop loss place won't give you value. Okay, and we want to make sure that we are getting tagged into the trade. So let's see what happens. Actually, I'm keeping both of the orders, because if this trade is being swept, then this trade will be tagged. So basically, it's a win-win situation. We know that the lower time frame has been turned into bearish again, because price has created a change of character after the 5-minute supply tap at this region, created a huge change of character, several places change of character at this region, created a break of structure to the downside here. And basically, we know that the intention is bearish. We know that either of this trade or either of this trade will be played out perfectly. So if this trade hits stop loss, so this decisional trade hits stop loss, then this trade will be tagged and we'll be able to ride this trade. But if price doesn't feel like to come up to this zone, then this zone will be the right. So let's just see what happens. Okay, there was a tag actually. Let me just move it here. And we'll be aiming for the 4-hour zone again. This is a little extreme scenario because we do not really aim for 1-to-30 risk-reward ratio trades. But let's just test it out, how it plays out. Okay, perfect reaction. Okay, actually, as you can see, that's what I was explaining. Price reacted on this downer area, didn't come up to mitigate the 50% of this candle, just reacted on the downside area, didn't mitigate this upper extreme zone, and we are in the trade. We've been tagged into the trade, and it's running in break-even perfectly. And why did we set break-even? Why are we setting break-even?
It broke structure, it did a boss.
Exactly.
Broke structure on the one.
Here was a break of structure to the downside. Okay. I'll be deleting this limit order from the upside. And there was a break of structure to the downside, which means another supply zone has been formed at this region, which is this one in this case, right? This supply level has formed a break of structure to the downside, because as you can see, this is a perfect flip zone. Price is reacting on some sort of demand zone at this region. Here's a footprint of the price action. This candle is the footprint of the price action. That's the footprint of the demand reaction. Here's a demand level. Price is reacting on this demand level, came down to mitigate that demand, came back above, closed here. And from this candle, price is created an inefficient push to the downside and break structure and broke demand. So this is a flip zone right here. And if I remember good, I actually took this trade on my personal account. Yeah, I took this trade. I remember I took this trade. So yeah, that's a little bit of cheating, but I'll be setting an order limit on this candle because actually this is a textbook setup. Yeah, I believe the full body won't cover the whole zone, so I will be using the 50% entry, and I did use the 50% entry on my live account too, targeting the 4-hour zone again. Let me just read the questions first. Flipping Kylie mentions zone criteria also for the trade. I took this one too, but wait for the liquid because actually this is a strong sign of the continuation for the short. So for me, it doesn't really require liquidity. It doesn't really require liquidity creation because let me just explain it. We needed liquidity for this zone because there was a possibility that this zone will be swept and the extreme would have been tagged. Without the liquidity, without the liquidity creation at this region, this zone could be easily liquidity. But take a look at here. This zone has been mitigated. This zone has been mitigated, liquidity has been swept, and this is the next recent zone after the break of the structure right here and the flip. So this is the origin. This is the origin of the flip right here and the break of the structure. And you don't really need liquidity for this. Liquidity is one more confirmation, but liquidity is one more criteria. But basically, there's no unmitigated area left above this one. Of course, the extreme one, but if price comes back up to this extreme one, I believe the trend will be changed and will be go for longs. So basically, you don't really need liquidity for this zone because that's perfectly enough confirmation for the continuation of the bearish order flow. Because as you can see, the overall higher time frame bearish order flow, I mean the lower higher time frame, which is the 15-minute chart and the 5-minute chart, has been turned into bearish at this region, as you can see. Price has swept liquidity with this movement to the upside here, swept all of the liquidity at this region, reversed to bearish again after liquidity sweeping movement because it broke below this 15-minute demand zone, reacted on the 5-minute candle that is broke below this 15-minute zone, reacted on this buy to sell candle, changed character on the 1-minute chart and started a bearish order for reacting on supply levels over and over again, created liquidity, broke structure again to the downside. So this is perfectly enough criteria. This is perfectly enough confirmation for me to take this trade, to actually take this trade, because, okay, I'll be risking it. If I'm in this position currently, this is in break even currently. If this will be swept out, I'll be taking -1 risk reward ratio. That's perfectly fine for me. I'll be safely risk this position. Okay, thank you. But why do you take not the first candle of the change of character? What do you mean? This is the first candle of the change of character. This is called, I was just explaining this. Okay, let's just see. There's a tap. Okay, 50% tap. Perfect. And keeping us in. Okay, perfect reaction. And it's running. It's running pretty well. As you can see, both of our positions are running pretty well. Let me just play price forward again. Let's see how it plays out. I will be closing these zones because it's actually painful to look everything in blue. And as you can see, a new zone has been formed again. A new continuation zone has been formed again. New high probability continuation zone has been formed again because this zone has created another break of structure to the downside here. Inefficient movement break of structure, liquidity creation for this zone. So this zone could be another good entry opportunity for us, as you can see, but I will just check the 5-minute structure. And this zone is actually lines up with the 5-minute structure because as you can see, this is our 5-minute structure. Reaction on this 5-minute zone, break of structure to the downside, pullback, breakout structure to the downside, pullback, breakout structure to the downside, pullback, breakout structure to the downside. And this 5-minute candle lines up perfectly with your 1-minute candle. So basically this 1-minute candle is the extreme of the 5-minute candle, extreme of its inefficient breaking structure movement to the downside. So I'll be safely taking this trade. Again, I'll be safely opening our order unit on this trade because it's part of the 5-minute zone, extreme of the 5-minute zone. And no, we are not waiting for a confirmation entry right here because this is a small movement. This is a small movement. We don't need to wait for confirmation entry because basically this is a 1-minute structure. This is 1-minute confirmation, which is a confirmation in itself because breakout structure on the 1-minute chart, liquid creation for this zone, it's confirmation and pro trend, following our pro trend. Okay, let's see. Let's just set another 50% entry at this region because I believe the full body won't cover the whole zone. Yeah. Setting an order limit. No reaction. Okay, no reaction, no tag. Liquidity has been swept, as you can see. Here was the liquidity. This liquidity has been swept with this movement. And after liquidity sweeping movement, price reacted strongly, created another change of character to the downside here, and started to continue the overall bearish order flow to the downside. So, just question, would you keep this order limit right here or you will delete it? Keep it. Anyone else? Would you keep it?
I would keep it.
Yes, I would keep it too. And we can actually do the same scenario as like this. As you can see, another breakout structure has happened here to the downside with this inefficient candle. Actually, it didn't body break below the rest low point. Actually, there's no breakout structure to the downside. Let me just mark it out with candle. Yeah, there's no breakout structure. There's no body break structure to the downside. So I will not consider this zone, this supply zone, as a right supply zone because this supply zone couldn't break structure to the downside with body closure. So this won't be a right supply zone. So this still could be a liquidity built up for this upper area. So we just keep that in mind that this could be a liquidity for that upper area. Let me just extend these zones real quick. Sorry. Extending these zones real quick, perfectly. And keeping this limit order on the 50% of this candle. Okay, we are keeping it. Because as you can see, this actually looks like liquidity built up for this zone. And knowing the fact that this supply level, this 1-minute supply level couldn't break structure to the downside with body closure to the downside, this will be liquidity for the upper area too. Okay, and let me switch back to the 5-minute chart. Okay, that was actually a spoiler, sorry. Yeah. Okay, and left without us, as you can see. But there's more liquidity. Here's more liquidity, as you can see. And all of this liquidity has been built up for this zone. But this zone couldn't break structure to the downside. This zone couldn't break structure to the downside. But this is the origin of the structure breaking movement. This is the origin of the whole order flow that was leading to breakout structure on the 1-minute chart. And there's liquidity being built up for this zone. So in this case, I would risk this scenario. I would risk this setup. And I will use another double entry confirmation here too. I will keep this limit order here because I will explain it. Let me just set the orders. Because if price tags us into this trade, tags us in this trade, that's a win-win situation as because if it sweeps this zone, this will be tagged, and that's a win-win situation for us, right? Just like in this scenario. Okay, let me just read the chat real quick. Your best setup. Please keep demand in control. No, demand is not in control. Yeah, could be in control because it's reacting on the 50-minute zone. Could be in control, but this 50-minute zone will be broken because it's part of the liquidity and the bearish intentions are much stronger, as you can see. Let me just show you the overall picture again. The bearish intentions are much stronger than the bullish intentions. And as you can see, price is reacting on demand zones over and over again. 50-minute demand reaction, 50-minute demand reaction, 50-minute demand reaction. But all of the demand zones are being broken sooner or later, as you can see. All of these demand zones are being broken sooner or later. And this demand zone, this 50-minute demand zone is part of the liquidity, which is leading down to this 4-hour zone. If price changes character to the upside, then I would call it as a demand reaction. And I would call it that demand is in control, but I need this supply level to be broken to actually call that demand is in control. Because all of these liquidity areas, all of these confluences are leading for the continuation of the short order flow. And if this supply level breaks and it breaks to the upside, I will call it as a change in the order flow. I will call it as a demand control again. But for me now, supply is still in control because the bearish intentions are much stronger, as you can see, as I explained. So let me just switch to the 5-minute chart. That will be a little spoiler. Okay, this zone, this 1-minute zone, actually part of the 5-minute zone, as you can see. So this zone is part of the 5-minute zone again. So in this scenario, you can do two things. First, risk the entry right here, take a risk entry right here, take a risk entry right here. Or if you're insecure about the trade, you're insecure about the direction, you can just simply wait for a confirmation entry. For me, it's obvious that price will continue the bearish movement because the order flow is extremely bearish on the lower time frames. But if you're insecure about the trade, you can just simply wait for a reaction. You can just simply wait for a confirmation entry on this supply level because this supply level is part of the 5-minute zone. So wait for 1-minute confirmation on this zone and continuation of the order flow. It's up to you. It's up to you what you do in your live trading sessions. If you're insecure about the position, just wait for a confirmation. That's all. Basically, react. You don't have to predict. You don't have to predict that if this zone will hold or not. All you have to do is react on this zone. For me, it's obvious that this zone will hold or this zone will hold. And I will easily reach these zones. So let's just see what happens. Sorry, a little water break. So let's see what happens. Price is actually continuing the bearish order flow, as you can see. It's still in the 15-minute demand. And we can consider this a break of the 15-minute demand. Let's just see what happens. Actually, the session is almost closed. Session closes in 30 minutes. So this could be a liquidity sweep and this could be a demand break too. As you can see, there was liquidity. Price has swept this liquidity. So actually this candle looks like a liquidity sweeping candle because we've learned everything about the liquidity sweeping candles. Here's trend line liquidity to the upside. Demand sweep, bam, liquidity sweeping candle. But I believe this liquidity sweeping candle created more liquidity inside of this demand. There's more liquidity. We could consider this as a liquidity trend line here. So I believe that's more liquidity. Let me just read the chat real quick. Can you show an example? Not right now. We are doing a backtesting session right now. Okay, let's see what happens. Oh, that's obvious. This wasn't a liquidity sweep right now. Okay, demand broken. So in this case, in this scenario, I will delete these limit orders right here, but keep these zones for directional purposes only. So what can we do in this scenario? We can switch to the 5-minute chart and find the origin of this break. And actually, as you can see, this structure is messy. This is messy, so I will just simply sit on my hands. Let me just switch back to the 5-minute structure. As you can see, all of this price action is basically efficient in this area. There's no real inefficiency that was leading to a break of this demand zone. But there was a body break of this demand zone. There was a body break of this demand zone. As you can see, this candle closed below this demand zone with the body closure. So we can fully consider this zone as it has been broken. But there's no clear price action at this region. Where's the clear price action? Can you just draw on my screen, please? Just draw on my screen. Where's the clear price action? Exactly. Thank you. There's the clear price action. And why is it the clear price action? Because there's the real inefficiency. As you can see, this 5-minute demand zone, supply zone has started the order flow that was leading to a break of this demand zone, this 15-minute demand zone, right? So this is liquidity built up for this zone. So in this scenario, I would consider that keeping a limit order on this zone still, or we can simply wait for a sweep of this liquidity and tap of this zone and 1-minute confirmation on this zone. But I believe that won't happen in this session because the session closes in literally 20 minutes. Yeah, 20 minutes. But just knowing the fact that this is liquidity built up for this zone, looks like a solid plan. If this, let's say it happened 30 minutes earlier, we will be easily waiting for this setup. So the top of this zone, liquidity sweeping movement, top of this zone, inefficiency fill up at this region, change of character here at this region, entry limit, bam. That will be a perfect textbook setup. So let's see how price reacts on these zones. Okay, the liquidity sweeping is, sorry guys, actually I forgot to manage the trades. We got 2 running positions. So let's see. The safest choice in this case will be to keep our stop loss above the liquidity line, so above the liquidity line right here. So I will keep my stop loss above this 5-minute supply level right here. So here's our stop loss currently. Okay, and we just switch back to the 1-minute chart. So our stop loss is at this region. This is our stop loss, maybe a bit above. We got our stop losses right here. So all of our profits are logged in. Why do we keep our stop loss here, and why don't we keep it, for example, right here? Let me just ask. Anyone, please answer the question.
Liquidity.
Exactly.
Ton of liquidity, yeah.
Tons of liquidity are sitting right here at this region. We can't keep our stop loss right here, because if we keep our stop loss right here, our stop loss will be the liquidity. We will be the liquidity, and we don't want to become the liquidity, right? If we keep our stop loss right here, that won't be the liquidity. Liquidity sweep happens, our stop loss will be still safe. Our running positions will be still in position. Okay, let's see what happens. Session closes in 7 minutes, so I'm not opening any more positions. Liquidity sweep is actually happening, as you can see. Session has closed, liquidity sweep has happened. Seems like this much liquidity sweep was enough for price to reverse to the downside again, because as you can see, liquidity sweep has happened from this demand zone. We just mark it out here. As you can see, this was the liquidity sweeping demand zone that was caused inefficient push. Here's the real inefficiency. Below this, there's no inefficiency, there's no inefficiency, no inefficiency. The inefficiency has started from this candle. Inefficient push to the upside, liquidity sweeping movement, reversal. Reaction on this demand zone, as you can see, here's a reaction. This dodge candle reacted on that zone, and there's a flip scenario, as you can see. And there's a perfect entry opportunity here on this dodge candle, which was the original of the flip. But this was after the session has closed, so we are not taking the setup. So we don't really care about the setup. We just see how our positions are being played out. Let me just extend these zones. Or no, just close them and wait for the 4-hour zone to be tapped. This is our target point still. Let's see how this plays out. As you can see, after the liquidity sweep movement, it just continues the overall movement. So this was really enough liquidity sweep. This was really enough flip. This was really a perfect confluence once again. Let's see how it plays out. Our TP is really, really, really close. Okay, TP hit. That was quick. Let's just count it. Let's just extend these zones. So the first position which we took was 30 risk-reward ratio. The second position was 28 risk-reward ratio, which is 30 plus 28 equals 58 risk-reward ratio in total for this session. Of course, this is an extreme example because you won't really hold your positions for this long, but we just tested it out. As you can see, this is the power of the trend. This is the power of the whole structure. We know that our structure was bearish. We know that the overall lower higher time frame was bearish. The 50-minute, 5-minute, 1-minute chart was bearish, and all of the confluences were leading down to this 4-hour demand zone. Knowing all of these facts, knowing the liquidity sweep, that the liquidity was swept at this region, knowing that the liquidity was swept at this region, knowing the liquidity was swept at every single region, every single confluence was leading down to this 4-hour zone, is basically a perfect combination of all of the concepts. Because as you can see, this is the power of the trend. This is the power of the main trend. We could easily try long trades, for example, on this region, but that will be counter trend trade. And we are following the main trend, which is bearish. And this is the final result for following the main trend, right? 58 risk-reward ratio in one single session. And as I said, of course, we won't hold our positions for this long because this will be extreme. I would have been closed my position at the 50-minute demand level because that will be the safest choice. And if I close the position at the 50-minute demand level, 16 plus 24, 14, that would have been 30 risk-reward ratio. So these are the possible numbers for this session. Targeting the 50-minute zone would earn us 30 risk-reward ratio. Targeting the 4-hour zone would earn us 58 risk-reward ratio. So yeah, session has closed. Have you guys got any questions?
No, sir.
Let me just see the chat if there are any questions. Proton discrete key, cool. When you're talking about the bias or proton, is it 50-minute or 4-hour? Basically, I was explaining this. The lower higher time frame, which is the 15-minute chart and the 5-minute chart, was bearish. Price has reversed on the 15-minute chart here after the liquidity sweeping movement, as you can see. So this was one big 4-hour leg. On the 15-minute chart, price has reversed to the downside, as you can see, created a downside change of character on several places, slapped the upside liquidity, which was one more confluence for the change in the trend, change to bearish from bullish. So the lower higher time frame was extremely bearish at this region after the liquidity sweeping movement and huge inefficient character changing movement to the downside. But the higher time frame is still bearish. So knowing the fact that the 4-hour time frame is still not bearish, the higher time frame is still bullish. Knowing the fact that the higher time frame is still bullish, we'll be able to look for long continuations from this 4-hour demand zone. So all we have to do is wait for a 15-minute change of character inside of this 4-hour demand zone, because as you can see, the 4-hour time frame. Okay, why is it lagging? Bar replay cannot be connected. That's strange. Okay. So knowing the fact, sorry, just mute yourself. So knowing the fact that the 4-hour chart is bullish because it created a change of character on the 4-hour chart after a daily demand tap and created a breakout structure on the 4-hour chart after a daily demand tap and created another 4-hour supply break and liquidity sweep on the 4-hour chart, we can easily say that price will be create a 15-minute change of character on this daily demand zone, 4-hour demand zone, and we'll be able to look for long continuations from this daily, 4-hour demand level, right? But you can actually combine the time frames together. If the 15-minute turns bearish, you'll be able to write the expectation order flow to this daily or 4-hour demand level, because the 15-minute has been turned into bearish. So what can we expect from the 15-minute chart? We can expect the 4-hour demand tap. We can expect the 4-hour demand mitigation. What can we do in this scenario? We can write the expectation of bearish order flow down to this 4-hour demand tap. Right? Bro, the first change of character at, let me just check it. This one. This was a change of character because I already explained this at the beginning of the session. Prices reacted on this demand zone. This demand was pushing price to new highs, as you can see. Price is coming up, creating a pullback here. And from this demand zone, from this weak demand zone, price has created a breakout structure on the 1-minute chart and caused the top of this supply level, caused the top of this 5-minute supply level. So basically, this was our last demand zone. Prices reacted on this demand zone, as you can see, after a supply mitigation. Price reacted on this demand level, created a pullback, and from this candle, prices created an inefficient movement to the downside. So this is our right supply level in this case. This is a flip zone exactly. Can you explain how sell to buy candle are created? Basically, sell to buy candle or buy to sell candle. Okay, let me just draw it, or let me just show you it on the 50-minute or 5-minute chart. So here, as you can see on the 5-minute chart, this is what we call a sell to buy candle. This is a buy to sell candle, because on the 5-minute chart, it looks like just two simple candles with a wick down here and a wick up here. But on the lower time frame, just think about it. On the lower time frame, this downside movement will look like this, and this upside movement, knowing the fact that here's the wick, will look like this. So on the lower time frame, it's a pullback, and from this pullback, from this buy to sell candle, the continuation happens. So the higher time frame looks like a buy to sell candle. The lower time frame actually looks like a pullback. Let me just switch back to the 1-minute chart. Have you guys got any more questions? Actually, John, please just keep down the company because I will run out for a cup of water.
Yes.
I'll
Okay.
I'll be back quick.
Okay. So guys, how do you like the session so far?
John,
Yes.
does this zone was on a 5-minute zone?
Sorry, I can't hear you that clear.
Does this one was a 5-minute zone?
This one, it was a 50-minute zone, I guess.
Oh, 15 minutes, okay.
Yeah. Guys,
Hey, John, I
yeah.
think it's scaling process, is it? Scaling, adding an extra position here.
Yes, it's scaling process, adding extra positions.
Okay.
Here I am.
Yes, London session will be the same. At 9 a.m. Hungarian time, yes.
John, I have, John,
Reiko, we are sending markups before each session starts. And we are sending markup updates as well.
I'm new in the membership. I would like to ask, are trade setup ideas given out in real time? Or did you answer this question, John?
Yes.
Okay, perfect. Yeah, basically we are sending markups before every single New York and London session. John is sending London markups, I'm sending the New York markups, and we are updating the markups in the mid sessions. So yeah, you don't have to worry about it. You'll just receive all of the updates and all of the markups. What situation must exist to get an order made out of a setup? I don't really understand this question.
You know that the question is, when will you remove your order? The price going down, and when will you sell? When will you delete the sell limit?
Actually, when there's a new setup.
Yeah.
When there's a new setup, when there's a new high criteria setup forms, we won't delete this order because there's liquidity being built up for this zone, and there's a possibility that this zone could be the liquidity for this zone. But if, let's say, price moves so far away from this zone, from this zone, and let's say it creates another perfect setup, for example, for this supply zone right here, then we'll be deleting this order because this is a new hyperbolic setup. Because if price turns back down at this setup, we'll be waiting for a confirmation entry on this zone. Amazing, guys. I'm sorry I came to at final, but yeah, it has been. Oh my God, let me just see. Am I actually recording this? Yeah. Heart attack. Chili Markets wanted to say, if you ever take limit orders, like you don't have time to trade and put limits. You always have time to put limit orders. Basically, if you're using a desktop metaphor trader, it's just a simple right click and place order. And after that, you can just simply open this position and copy all of the information from this. Basically, it takes up 10 seconds to do that, to open a position. Do not refine 4-hour zones to the 15-minute and then trade from them. What stop you from doing? You can refine your 4-hour zones, but that's not necessary. You can simply refine your 4-hour zones on the 15-minute chart for much cleaner target points, for much cleaner understanding of the whole structure, but that's not necessary. You can just simply keep the 4-hour zones the way it is. Okay, guys, I'll be answering 2 more questions if you got any questions. But before I answer those questions, I'd like to ask you, how did you like this backtesting session?
hey man, it was really worth.
Oh, no. I will ask it in Discord. That's much cleaner. I can't really see the chat right here.
You're amazing, guy. Amazing.
Amazing. Thank you.
Yeah.
Thank you for all the feedbacks, guys. Hi, teacher. I did not understand well market bias and POI. What part did you not understand? The recording will be up maybe later this day or tomorrow. It will be up in 24 hours.
Hey Marcel, I have a doubt, man.
Yeah, I'm here.
If there were no liquidity towards my target zone, should I enter?
If there's no liquidity for your POI,
Yeah. If there was no liquidity, should I enter or not?
it basically depends on your criteria. If the liquidity is the only criteria missing, then I will recommend to go for it. Knowing the higher time frame plan, knowing the actual breakout structure, flip zone, etc., etc. And if the liquidity creation is the only criteria missing, I will recommend you to go for it. But you have to combine the criteria together. If there's liquidity for the zone, that will be much stronger. With a proper liquidity creation for a zone, that will be a full criteria, high probability setup. Okay, guys, I will call this a session end. Thank you guys for being here. Wish you guys a beautiful rest of your day and meet you tomorrow. We'll be sending the markups. John will send the London markups. I'll be sending the New York markups. And yeah, see you tomorrow, guys. Wish you a beautiful upcoming trading week. Wish you a beautiful upcoming trading day tomorrow. Thank you for being here.
Thank you for being here, guys. Take care. See you tomorrow.